Hi, this is Nicholas Vardy of the Oxford Club, and welcome to this week's edition of Buy or Buy. In this series of bi-weekly videos, I take a popular stock making the media rounds, and I strip away all the hype, and I tell you whether to buy now, buy later, or buy never. Of course, this week's headlines have been dominated by the Russian invasion of Ukraine. Europe is facing its worst refugee crisis since World War II, Russia has been cut off from the global economy, and Vladimir Putin is even threatening the prospects of nuclear war. For all that, global financial markets reaction has been surprisingly muted. That's because investors believe that with every crisis, there's always a new opportunity. As a result, Wall Street has refocused its attention on the long-neglected oil and gas sector. The oil and gas sector offers new opportunities for investors very different from the tech-driven investments of Silicon Valley over the past 5 years. This week, I want to take a look at a leader in that oil and gas sector, Exxon Mobil, ticker symbol XOM. Exxon is a behemoth and a global leader in the oil and gas sector, boasting a market capitalization of about $330 billion. Experienced investors will recall that there was a time when Exxon Mobil was once the world's most valuable company as measured by market capitalization. And the rally in the price of oil has attracted investors' attention once again. The question is, after rallying over 40% over the past 12 months, is Exxon still a buy? Or should you give this unpopular, often hated stock a pass? Founded in 1870 and headquartered in Irving, Texas, Exxon Mobil, ticker symbol XOM, is one of the largest companies in the energy business. Exxon engages in the exploration, production, and sale of crude oil and natural gas. After a gut-wrenching 2020, which saw its profits fall to historic lows, Exxon Mobil is having a terrific 2021. Revenue jumped more than 80% last year amid a rebound in oil and gas prices. Fourth quarter profit came in at $8.87 billion, its largest in 7 years. Exxon earned $2.05 per share, far ahead of the $1.93 per share that analysts were expecting. More impressively, Exxon actually generated free cash flow of $48 billion from operating activities, which was its highest since 2012. So with that, let me set out the bull case for Exxon. Analysts are expecting another strong year ahead for Exxon Mobil. Here's why. First, high oil prices are a godsend for Exxon Mobil's profitability. As I've noted, the company's free cash flow soared in 2021. That free cash flow will explode even higher with higher oil prices in 2022. Analysts are now expecting 18% revenue growth and earnings growth of 23% in 2022. But that was before a potentially even higher oil price was factored into their calculations. I expect those numbers will be revised upward on the back of ever higher oil prices. Yet, despite its strong growth and its 4.52% dividend, shares of Exxon trade at just over 12 times 2022 earnings. Second, Exxon Mobil is now lean and mean, coming off many cost-cutting measures to boost its profits. After suffering historic losses in 2020, it has been restructuring, selling assets, and slashing costs to boost shareholder returns. Those efforts helped the company post its best annual profits in 7 years in 2021, and I expect it will do the same in 2022. Third, Exxon plans to deliver more cash to shareholders than ever. The company said it will increase the pace of its share repurchase program during the first quarter of 2022, as part of a previously announced plan to repurchase up to $10 billion worth of stock over the next 12 to 24 months. Couple that with a whopping 4.52% dividend, and Exxon Mobil is a pure money-making machine. Now let me set out the bear case for Exxon Mobil. First, and most recently relevant, Exxon now has to unravel its Russian interests. Exxon Mobil has more than 1,000 employees in Russia and has been in the country for over 25 years. A subsidiary of Exxon, Exxon Neftegas Limited, has a 30% stake in Sakhalin-1, a vast oil and natural gas project located off Sakhalin Island in the Russian Far East. Exxon will now have to exit this business as a result of recently imposed Russian sanctions. That said, ExxonMobil valued its Russian assets at just $4 billion in its latest annual report. That represents less than 2% of its fossil fuel assets. In fact, the word Russia was not even mentioned in the recent call with analysts. A second challenge that ExxonMobil faces. ExxonMobil is on the blacklist of an increasing number of institutional investors. ESG investing, which stands for environmental, social, and governance investing, is all the rage. High-profile college endowments in the U.S., like the Ivy League, have banned investing in companies like Exxon. and a company cannot thrive without investors. That said, profit-maximizing hedge funds will be happy to jump into the breach to invest in Exxon where public pension funds or endowments cannot. Third, Exxon Mobil is constantly engaged in a PR war to defend its turf. The oil giant is feeling the heat from investors to do more to reduce its carbon footprint after losing a quarter of its board to an activist campaign last year. Exxon Mobil recently announced the launch of a carbon capture facility in LaBarge in Wyoming with a $400 million project expected to start up by 2025. All these are increasingly necessary measures for Exxon, but they are also far less profitable than its traditional oil business. Now, before I render my final verdict, don't forget to sign up for Liberty Through Wealth, a free e-letter that I contribute to twice a week. Liberty Through Wealth is packed with strategies for building your wealth and helping you live a financially more independent life. You'll also have a chance to read my often contrarian views of the market. Just click on the link below to subscribe. Oh, and by the way, for those of you still holding on to AMC, Peloton, or Facebook stock, companies that I've called buys in the past in previous videos, I'd like to hear in your comments why you still expect these stocks to rebound. My final verdict, Exxon Mobil is a buy. The upside for the stock include the soaring price of oil, Exxon Mobil's massive restructuring efforts, and the return of funds into the hands of shareholders through stock buybacks and increasing dividends. The downside for the stock is the cost involved in unraveling its Russian assets, its status as a stock non grata among institutional investors, and the cost of dealing with constantly negative PR. With oil prices exploding, Exxon will be a very profitable stock in 2022, and its 4.52% dividend is a bonus for income-oriented investors. I hope you enjoyed this episode of Buy or Buy. If so, please hit the like button below. I want to remind you that these are not recommendations actively tracked in any portfolio. If you want to follow any of my buys or sells, size your position accordingly, set a trailing stop, and never bet more than what you can afford to lose. Thanks for watching, and I'll see you next time on Buy or Buy.